Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what are advantages of trading Forex over equity? Answer by, I actually struggled to understand and to forecast the signals in Forex. I then identified a software program called Forex Profiter which helped me to figure out the signals, so that I gained more profit using Forex in a smart way. It's not a self-promotion, I just can't stop myself from explaining its functions due to the profit I obtained from Forex Profiter. Just Google search, Forex Profiter v3.1 to know more about it. Well then, I'll provide you the answer for your query. Traders that have in the past engaged in equity trading realize that trading in the Forex market has major differences than trading in the equity trading market, as the Forex market is a non-stop market that trades 24 hours a day 5 days a week, therefore offering traders opportunities to both trade at odd hours and additionally capitalize on facts or breaking news that make it to the headlines all around the clock. Thinking back for a second, you will realize that any sort of an investment market lacking liquidity and substantially a lack of sellers and buyers at any given time is doomed to be escaped by traders which cannot be accommodated and will seek an investment market that can match their needs and match their requirements in offering liquidity. As the Forex market operates with a worldwide massive network of banks, corporations, hedge funds and retail traders just like traders here at Trading Point Holdings, it is only reasonable that it is classified as the world's most liquid and emerging marketplace which does not sleep and does not have working hours. In difference to equity trading that have a very rough time selling their assets at times when the market might be moving against them, the Forex market has one main basic difference not only from the equity market but from all markets available worldwide, and that is that there is always a buyer and there is always a seller available all around the clock 5 days a week. The practice of trading currencies has one main advantage which enables the high liquidity present in this particular market. The market's constant and emerging volatility provides the constant potential for gains and of course, the constant potential for loss as well. Forex trading can be very risky when abused, similar to any form of trading, but execution in or out of trade should not be a problem when trading through reasonable boundaries. There are certain specifications of the Forex market that make it superior in a way that it is easier or safer to trade compared to other markets. Among these are liquidity, ease of access, availability of information, flexibility, time constraints, and sensitivity to outside events. Liquidity, trading volume, position taking, easier to follow, lower transaction cost, high leverage. Many people are choosing to trade Forex today, as there are many benefits of this trading option. The following are some of the main advantages of Forex trading and the reason for its popularity. Answer by Carl Dittman. When trading Forex, regardless if you are in Tokyo, Chicago, Kuala Lumpur, Athens or New York, when you open your trading platform there will always be buyers and sellers, as the Forex market literally does not sleep. This flexibility offers opportunities for traders to both practice Forex as a part-time practice and moreover it allows them to conduct other business practices during regular business hours which do not affect their trading practice. Additionally, the flexibility of Forex does not require a trader to be in one physical location, as the only tool he needs to trade is a computer or a computer-based telephone that will allow him to have access to the internet. In the equity market it is important to understand that trading after hours might in some cases be allowed, but it will have major limitations as equity traders have access to matching systems often known as ECNs, which in reality are an internal network allowing traders to interact with one another and trade. It is only fair to say that these kind of networks are unable to offer tight spreads during after hours trading, which means that most trades are not executed at fair market prices, meaning in reality that no guarantees can be presented in regards to if every trade can be executed. Thinking back for a second, you will realize that any sort of an investment market lacking liquidity and substantially a lack of sellers and buyers at any given time is doomed to be escaped by traders which cannot be accommodated and will seek an investment market that can match their needs and match their requirements in offering liquidity. As the Forex market operates with a worldwide massive network of banks, corporations, hedge funds and retail traders, it is only reasonable that it is classified as the world's most liquid and emerging marketplace which does not sleep and does not have working hours. In difference to equity trading that have a very rough time selling their assets at times when the market might be moving against them, the Forex market has one main basic difference not only from the equity market but from all markets available worldwide, and that is that there is always a buyer and there is always a seller available all around the clock 5 days a week. The practice of trading currencies has one main advantage, which enables the high liquidity present in this particular market. The market's constant and emerging volatility provides the constant potential for gains and, of course, the constant potential for loss as well. Forex trading can be very risky when abused, similar to any form of trading, but execution in or out of trade should not be a problem when trading through reasonable boundaries. High leverage in contrast to equity trading. When talking about Forex, the most important key factor to discuss is that of leverage, as the particular term brings is what brings both risk and gain in what we call the foreign exchange market, which is something not present in equity trading. When we talk about leverage, we describe the possibility to control positions larger than that of the face value of the capital associated with the assistance of leverage. We offer leverage as high as 1/500, which traders have the benefit of taking advantage of regardless of what kind of account type they maintain, therefore allowing them to gain a competitive advantage over equity traders. From one point of view, leverage is what brings risk to the Forex market, but it can have high advantages in contrast to equities trading when it is not abused and properly used. In order to best understand what the advantages of leverage is, you should first of all realize that the currency market is in a constant moving phase with relatively very small market movements. To make it easy to comprehend, you should understand that the average movement across currencies is around 1% across all major pairs available for trading. If you might compare that to the equity trading market, you will soon realize that, as the daily movements of the equity market are around 10%, you will realize why large volumes are needed to accumulate a respected profit from a price movement. Made even easier as the changes of the currency market is small, tiny, you need a large volume of movements in order for the multiplier to present a relatively respected figure to the table. Without the presence of leverage, most retail traders cannot really trade in the Forex market, as with a small capital they can't really experience any sort of respected gains which will allow them to sustain a profit and at the same time position them in risk, as many rookies make a common mistake of opening to many positions simultaneously, meaning that an unexpected marker movement might mean a large drawback. Answer by Anil Panchal. Many people hear about equities in the local markets, but there are very few who knows about Forex. However, the case is adverse in the developed world, and that's the reason why Forex is world's largest financial market and not the equities, or stocks. The stock market is the overarching name given to the combined group of buyers and sellers of shares, or stocks. Shares in a company, as the name suggests, offer a share in the ownership. Usually, though not always, these transactions are conducted on stock exchanges. In order to raise capital, many companies choose to float shares of their stock. Stock exchanges provide a transparent, regulated and convenient marketplace for buyers to conduct business with sellers. Trading on these exchanges has historically been conducted by open outcry, but the trend in recent years has been strongly toward electronic trading. The Forex market, on the other hand, is decentralized. It represents a trading network of participants from around the world. The large players in the Forex market include investment banks, central banks, hedge funds and commercial companies. Some of the advantages of Forex over stocks are as follows. 1. Higher liquidity. 2. Wider focus on economics. 3. Margin and leverage requirements. 4. Trading times liberty. 5. More amount of free and authentic research available. Hence, for me, the Forex is much better than the stocks, though everyone has their own preferences, and hence one should prefer the market which suits his/her trading capacity. You can read more about this issue here. https://admiralmarkets.com/educa